Well, hello everyone. I hope you're doing great. Let's start with the euro versus the US dollar. Look at this double bottom, how accurately it played out last week. At the 2.0 Fibonacci extension, the price formed a bearish engulfing reversal and then moved down, drawing Fibonacci from this swing low to that swing high. The 61.8% or golden ratio aligns perfectly with the demand area where I marked this rectangle. If the buyers step in, we will see long green candles around this level, and that will be an indication of more bullish momentum. But if the price fails to bounce from this level and moves down, the key level of support will be the 1.15. On the other hand, if the price continues the uptrend, the first key level of resistance will be obviously this one around 1.17. Next one on the list, Great British Pound versus the US dollar. This is the 4-hour time frame. Clearly shows a market moved up. The lower lows and lower highs broke right there, and the market formed the first higher high. Impulsive uptrend showed that the buyers are in control, and we will expect the price at the deep retracement to stop where are these buying orders resting and to take over for one more impulsive uptrend. But if the price fails to bounce from this level and moves down, the previous week's low, which is this swing low down there, will be the key level of support. In case the price keeps going up, there are a couple of resistance levels close to the first resistance, which is the previous week's high, and they can serve as strong resistance areas, all these three. Undoubtedly, if you are following the weekly analysis, you will notice that the Australian dollar was the weakest and ended the week as the weakest currency. The price now created equal lows, as you see down there. That means if the buyers will step in and break above this high, they will likely push the price further up. But if this ends as a descending triangle, we will expect the price to break below and continue further down. See the key levels of support. The one is here and the other is just 25 to 30 pips underneath. The key level of resistance is far away, but if you do day trading, you have to know that every turning point will serve as a strong resistance. This is a 4-hour time frame. If you trade this on the 5-minute or 1-minute chart, all the three resistance here will be considered as significant. The US dollar versus the Japanese yen. As I keep telling since the last two videos, the price will eventually tap into this area to fill up this gap. If the US dollar keeps going down, will automatically help the push to the upside of the euro, sterling and Australian dollar, and we will see the gap to be filled. In case the price finds support right here and bounce from, we have to see a break of this downward trend line to confirm that the buyers will step in, the market will turn from a downtrend into an uptrend. If we don't see that, there is no reason to just buying aggressively. If the price breaks below the support, the next area of support is here, and then the market will enter into the empty zone to fill up the gap. The last key level of support, it's obviously the swing lows, rest at 146.6 Japanese yen against the US dollar. And on the flip side, every resistance level, swing high, will be considered as a key level of resistance for the lower time frame trading. What about the chart of gold? Many of you, I know you're trading and you are extremely curious. This is the only bearish engulfing reversal candlestick we saw on the chart since this one here. That was on September 17. So after 1 month, the market printed another bearish engulfing. In case the price breaks below the Friday's low, we will see clearly on the 4-hour time frame the strong demand zone where buying orders are sitting right here around 4,125 US dollars. I want you to see how long are the last 3 red candles compared to the last 40 green candles. Especially these two are too long compared to all this here. That means the sellers came in aggressively and they are willing to push the price lower. So what's the plan for next week? If the price breaks and closes below the previous week's low, which is the support, we will check how the market will react at this demand area. If it breaks that demand area, the next key level of support is slightly below $4,100. In case the market goes on red, we will see the price trading below the $4,000 next week. But on the flip side, if the price goes up, the next key level of resistance will be the 4,380, which is the previous week's high, but also the all-time high. You have to apply this on your chart and you have to monitor this level if you are trading gold on a daily basis. Platinum, the weekly chart came up with another bearish reversal price action. That's the shooting star. It has a long upper tail and bearish implications. On the 4-hour time frame, the market, as we see, is losing gradually its momentum. We can see how this retracement formed with two large green candles compared to the previous retracements I point on the chart now. Because the market failed to sustain bullish candles as soon as it broke above the previous swing high or the recent swing high, that has bearish implications, with the supports being this one and that one there respectively, and the resistance on the other hand going to be the all-time high. We can connect these two swings because they consider as key level of resistance. That's why we will name them as a supply zone. Crude oil or US oil keeps going down, forming lower lows and lower highs. Is approaching a critical level of support at $55 per barrel, extremely critical level for the crude oil. If the price breaks below that one, the next key level of support will be around $51. That's the weekly chart. But on the 4-hour time frame, as you see, the market trades within this downward channel. The price currently is around the return line. That means if buyers will step in aggressively to push the price to the upside, we will expect to see the price reaching at least the downward trend line. If it breaks outside of this trend line and closes above the $60, then the next key level of resistance will be obviously the $63 per barrel. Cooper is going sideways, still trading with this long bearish candle form Friday, October the 10th. We need a clear direction, either a break below this low or a break and close above this high at $5.2 for a bullish continuation. Currently, the market is just drifting sideways. Bitcoin, the weekly candle didn't end yet. The price is bouncing around $107 per coin. On the 4-hour time frame, a long bearish candle went for a breakout, but it looks like that this bullish engulfing and the next bullish candle can push the price further up. The key level of resistance on this one here, it's going to be the high of this bearish engulfing. Why that? Because the market right here, guys, went for a solid breakout, but a long leg doji candle stopped that move and a bullish engulfing appeared around this order block, and this is an unusual price behavior. Currently the price is trading within this bearish engulfing order block. If sellers step in, we will see the price back to $103, but if buyers will step in, then the price will break and close above $109, and then we will see likely the 113,000 to be the resistance and then 116,000. But it's a long way until then. What we see now is this range, so pay attention to this for now. Solana on the 4-hour chart didn't form the double bottom. We see buyers are stepping in gradually. This downward trend line kind of broke, very steep and short-term downward trend line, but good enough to point out the last downward impulsive trend. The market is driven by selling pressure. The lower lows and lower highs are still valid, so the market technically is in a downtrend. This swing low turning point, we don't know if it will end up as the beginning of the trend reversal. The critical point will be the 200 resistance, anywhere between 200 and let's say $198 resistance. So mark that on your chart. Close above this one will push the price back to 211, but a rejection from that level, and especially a break from this one, will set the price further down to 170. The buyers has to be able to defend the zone for the price to remain and sustain above $170. That's all about the chart. Thanks for watching. I wish you happy trading, and I will see you in the next episode.